Hey, good morning, everyone. This is Vance out of Seattle here in the United States. Welcome to my live Forex trading show and my analysis. If you follow my analysis over time, you'll see that I'm using a technique I call price logic analysis. And what that means is that I'm only looking at the behavior of people, not candles, chart patterns, or indicators. Things like candles and chart patterns and whatever it might be. Those are symbols of the behavior, kind of like words represent an idea. So anyway, if you follow along, it'll make more sense. But the main thing is if you're going to make great decisions, you're going to need the best information, and the best information is always going to be the human behavior itself. Again, what I share with you on these live sessions is for educational purposes only, so keep that in mind. So far this morning, a lot happening. The European Central Bank lowered interest rates, and there's a lot of talk about the infusion of more money, in other words, printing more money. The code word is quantitative easing, but it's not looking good in the Eurozone. And so lowering the rates, infusing money, this is all basically negative for the euro, and that's why we're seeing this dive right now on the chart here on the left. And that started, let's see, let's look at the time that it began here. Started diving about 7:30 a.m. Eastern. So that was the start of the big move. And I'll take a closer look at price here in just a moment. Let's see, what else? Just a few minutes ago, well, actually about 20 minutes ago, ADP, that's a private statistics group. They put together what they expect to be the non-farm jobs data for here for the United States, and that was actually not as good as they expected as well. So that was actually negative for the dollar, and that's probably why we're seeing the bounce here right now on the pound. There's still more to come. Draghi's starting to speak right now out of the Eurozone. We've got more U.S. data. This is just it's just been quite a morning, and I think the first thing you have to know is that on a day like this, it's very difficult to interpret what the data means, and even more difficult to interpret how all of the data will interact with one another as it affects price. So on a morning like this, when there's more high-impact data than we've seen in a year in terms of what could really move the market, it really is better just to sit on your hands. And naturally, the more money you trade, the more uncertainty reaches into the heart of your mind. But I mean, this is pretty easy. I mean, I posted the economic data yesterday showing how much influential high impact data we were anticipating this morning, and when you see that, it's better just to stay away from it. And the reason why is because there's a couple of big reasons. First of all, a lot of people actually do speculate on what they think price will do before and during when the data is being released. And so this causes, if they get it right, it really flies. If they get it wrong, it jumps around. If they find out they misinterpreted it, it moves back the other way. So you've got this group of people and players that are just speculating around these periods to make a fast buck. And so that causes price to really fly in big swings. So you got to watch out for that. And we're seeing that right now in the pound dollar. I also want to tell you something important. You might be thinking, well, could I trade this? And I'm going to tell you something really, really important right now. Let's say that you were watching this pound as it was flying down the chart here, and that was at the release of the ADP non-farm data. And let's say you thought, well, this is going to go down. This is bearish, and it's looking to me like it's going to go down. I'm going to speculate that it's going to go down. And so you see the non-farm payroll data come out, the ADP data, and you look for an entry right in here. All right, so what you do is you press the sell button. You go, oh man, I got a fantastic price. I sold right there. I'm going to put my stop up here, and I'm going to target some area down in here. Okay, can you do this during the release of ADP? Not on most Forex, retail brokers. You can't do it because what's going to happen, go ahead and push the buttons when this thing's happening on a demo account. What you're going to see happen is you're going to try to get it at 64.23 and we push sell. You're going to be really surprised to find out that you got 64.03. You're like, wait a minute, price is still right here. The brokers do this to protect themselves. They don't give you the price. Now they probably will ask you, hey, the best price we can give you is this. Do you want to execute? And what I'm saying is that most retail brokers are not going to allow you to get the current price during fast-moving data. So even if you were fantastic at what you do, you won't be able to trade it. Now there are some exceptions. I'm not going to promote any particular broker. There are some exceptions. You usually have to have a higher minimum balance, like a minimum of $10,000, and you can get it at that price or really close to it. But that's something to look at. But you'll see, like, almost all retail brokers, they're not going to let you get in at that price while the data is being released. Just push the buttons and see for yourself. So the point is, it doesn't matter how good you are. They're not going to let you get in because they have to manage their risk. There's no conspiracy. They have to manage their risk. They don't want to get caught, in a big loss because of speculation. All right, so let's take a look at the charts. Let's go over this euro again. The ECB lowered rates, and this dives down. Some of you might be thinking, well, how could I anticipate that? Well, I think that this moment, if you were really skilled and really experienced, I think you probably could have anticipated this moment a little bit. There was nothing positive on the outlook for the euro. They want the euro to go down because of inflation. They want to be more competitive. The data coming out of the Eurozone is not great. And then there was talk about them, lowering rates, about more quantitative easing. So if you were dialed into that story, you very well could have entered a trade here. Now the problem with that is even if you punch the sell button right there and you wanted to put your stop up above here, depending on your broker and how they function, you might not have been able to get that stop executed there if price actually went the other way. So you might have had a huge amount of slippage on the release of that data. So that's a risk. That's an added risk. If you're trading, if you're risking $10, you probably don't care. If you're risking 1,000 or 2,000 or 5,000, it probably becomes an important factor. So again, trading around highly volatile data has its own unique risk involved, and the more you trade around it, and I do suggest that you guys do on demo accounts, the more you'll see that. So let's take a look at price logic, and let's just pretend that this is just normal movement and it's not high impact data. Let's drop down to the 5-minute and see what we see. So we pretty much see one long move without a move back. See, it's not pulling back in any meaningful way there. It pulls back to 23.6 there. They did take some profits there, and then it makes another move. So it hasn't done any meaningful pullback, but I think this is repositioned money. And what I mean by that is that's just like they're just moving from the euro to the dollar. This isn't speculative behavior. This is just money changing bank accounts. That's different from people who are speculating on price movement. So, but if you don't have a lot at risk here, I mean, look at this move. This is 134 pips in a pretty short period of time. That move in the first 5 minutes is about 100. So typically, what we would do if you're trading for real is you would wait until all of the dust settles from this. Remember, we've got the actual non-farm payroll coming out tomorrow from the Labor Department. That's coming in behind this. This week, this first week out of summer, I think you just almost have to write off. Though there were a couple of good trades in the middle of the week, but right now there's this hyper volatility, and you kind of want to let it shake out. Let's take a quick look at the pound. Zoom out. Okay, so this is a 30-minute that I'm on right now. watching this movement coming out of, start of London. And then it really didn't take off until ADP. Now let's zoom in on the 5-minute chart, and I'll show you we did get some nice behavior prior to the release of ADP data down here. You saw this start to make a move, pulls back perfectly to 38.2, and then starts another move down. So I can get rid of that new wave there. And then this move starts, well, you could argue it starts here or there. Technically it would be there where the momentum starts and doesn't stop. And then as you get down in here, let's look at the timestamp. That white candle is when the ADP information was released. And so this wave that moves down, remember this one already pushed, pulled back, pushed again. That's the human behavior that we look for, that we know we can count on. So that's done with. This one then pushes, ADP is released, and it reverses 100%. So if you were looking to trade this right now based on human behavior, there's nothing to trade, okay? Because this behavior already played out, the psychology that causes people to buy and sell, and this trade already reversed. In other words, if this was a horse race right here, and you were betting on a horse race, the horses are back in the barn, okay? They're not even on the racetrack. This is over. This is gone. And so now you just, again, I just say sit on your hands, relax, and enjoy the fireworks. Australian dollar moves a little bit differently than the others. It's tied to commodities. It's got a very different economy. It doesn't move quite like the pound and the euro. Of course, the pound and the euro move very different as well. But let's go to the 5-minute and take a look at it. If you want to practice, let's see if there's a trade there. Let's see. So we've got some momentum that takes off here. We've got an uptrend, no pullback. Yeah, the Australian dollar is in a position, and I would say this is strictly for a practice trade, unless you have been trading, in your trading plan, and you're a Australian US dollar trader. So there's potentially a setup there. If you're in level 1 of my program, you can trade any barrier. Kiwi's finally coming out of this range right here. Let's see. Let's put a little barrier on there. Put you a price on there. And then let's drop down and zoom in. We're not trading the 5-minute chart. We're zooming in to see the behavior is what we're doing. All right, so this was pretty much one long move all the way up as it comes out of there. So we really quickly double check that. Yeah, trend's fine. All right. So the Kiwi, yeah, you could look at a practice trade on the Kiwi as well if you're practicing in a demo. So this is going to be a really strong area here, obviously. Okay, let's see what else I have for you guys this morning. Oh, I know. I wanted to show you guys at my website, forexautoWar.com. That's the inside with the members there. But I want to show you on the front page. We're publishing a lot more data, on the home page. Uh-oh. I don't know why that was so slow. Like here's an announcement about my show, and you click on that and play the show. This I posted shortly after the ECB lowered their rates. This was something that's kind of cute. I posted yesterday to tell you that today was going to be quite something in terms of high impact data. This was yesterday morning, talking about the current look of price analysis. Even though I didn't do a show, I posted some analysis there. And then you got things like this, Master the Fibonacci tool. This teaches you my technique of drawing new waves, new wave Fibonacci. So basically the new wave Fibonacci, what it does is it allows you to see the buyer when the buyers or sellers really have an advantage and how strong that advantage is. It's probably one of the most valuable techniques I ever developed, and it's very accurate. So that's there for free. By the way, I don't sell my education, guys. I give it all away. What I charge for is mentoring, coaching, watching you. So what I do is really a training program. Everything else out there is education, or at least most of it. So anyway, do keep that in mind. Tune into my website regularly. Pretty soon you'll be able to sign up with each topic for an RSS feed, and I'm going to get away from sending those emails. So that's all I have this morning. I hope you guys got just one valuable idea this morning. If nothing else, hopefully we saved some money telling you to sit on your hands. Members, I'll see you guys coming up in about 40 minutes in our live trading room. Everyone else, cheers.